Good afternoon, everyone. From the Asian Institute of Technology, we are back with our the next installment in our series on Six Sigma, Lean Six Sigma. Today's topic is lean banking and finance. So we welcome you all to our program. And before I introduce our panelists, I'd like to welcome our Executive Director, Dr. Jonathan Shaw, and invite him for some opening remarks. John, Dr. John is muted, I think.
Okay, so thank you, Faiz, and a very warm welcome to everybody. Good afternoon, Toosy. Good afternoon, Mr. Tugel.
Good afternoon.
And we're looking forward to another very interesting webinar in this series of collaborations with you. So this, I think, is a particularly interesting topic for many people, and I think we're excited to hear the insights of our guest speaker, and looking forward to hearing and learning more about the application of lean thinking to these topics. So thank you very much to everyone. I will confess at this point that I'm also a learner in this on this particular topic. I look forward to learning more. I look forward to the interaction with yourselves and with the participants, and looking forward to a very fruitful webinar in this latest collaboration. Thank you very much.
Thank you, John. Well, my pleasure again to welcome our panelists to today's webinar. Of course, our regular lead panelist is Mr. Muhammad Ali Toosy, who is Chief Executive of Toosy Advisory Services, and he's had a very diverse background in helping build efficiencies in a number of industries using Lean Six Sigma tools. His experience spans telecom, computing, defense, manufacturing, and the service industry. And his clients represent a number of multinationals as well as vibrant local businesses. Welcome, Ali, back to the program.
Thank you.
Thanks. Our next panelist, our panelist for today, the subject specialist for today is Mr. Toosy Ali, who is head of Asia Pacific for Blue Marble Insurance, which is a micro insurance and a digital business company. But Mr. Ali comes from being head of digital financial services at Finca Microfinance Bank, where he headed up branchless banking for various digital financial service providers in Pakistan. Before that, he was with Microinsure in Africa as head for the Africa market. Microinsure, of course, is the global leader in mass market microinsurance. So, and of course, before that, he has a career in financial services for Telenor. So, quite a world-spanning career. Toosy, welcome to AIT as well, and we're delighted that you're able to join us. So, with this, I'm Faiz Shah. I'm head of the UNIS Center at AIT, and also look after the Lean Six Sigma Academy collaboration with Toosy Advisory Services. And it's always a pleasure to welcome you all. Let me allow a few minutes for a lead-in. As you know, one of the key determinants of most of the sort of poverty alleviation programs, social equity programs, and generally social welfare-driven programs is the access to spending money, or the access to capital. Whether it's Jeffrey Sachs, or whether it's Muhammad Yunus, or whether it's Bill Dayton, everybody has indicated that poverty is not just the absence of money. Poverty is the absence of infrastructure that blocks the access of money, resources, and financial services to people who don't have traditional financial or material capital. So when you look at any poverty alleviation program, when you look at any social equity program, the connection between micro capital, micro financial services, and digital platforms that democratize these services immediately jump to the fore. So when we look at the digital finance industry, we realize that although the program or the philosophy itself hasn't been formalized for more than like 22 years, the elements of social capital driven finance are historically present in society. But which, if you layer that with the digital enabling environments that we have seen in the last 2 decades, this sudden access to finance through technology enabling services has already transformed and has the potential to further transform access and equity in the kind of work that we do, which is poverty alleviation and pro-poor technologies. So with that in mind, I think I'd like to lead us into the first question, which is about the origins of modern microfinancial services. So, Ali, would you like us to revisit very quickly the emergence of the modern version, the modern interpretation of lean microfinance services or lean banking for that?
Okay, interestingly, what happened was that it first happened in Germany in the early 90s. Like Lean Six Sigma initiated in the mid 80s, and it initiated from the from the manufacturing sector. And the literature on lean banking was already available and published in 1993. But that was published in German language and wasn't translated for a few years. But the Germans were actually doing it. So it roots back to the early 90s. I think if I'm not wrong, it took 6-7 years for the first bank, which was non-German, to start implementing lean management and Lean Six Sigma.
So here we are talking about the advent of lean management in banking, or the lean banking as it's now called.
That's right.
If Togra will add to this perhaps historical initial perspective on how does the lean bank, for instance, compared to the standard regular banking services that the world has come to know and trust for a long time?
Well, thank you very much for that question. I think to put it in layman terms, very plain and simple, what we're really talking about is removing fat from the system, waste from the system. And what does that really mean? So a bank is not just transactional. Usually a relationship with a bank for an individual is a long-term relationship. People create accounts, they put in savings, they invest, so there's a long-term perspective which is taken. What we have witnessed, if you see the evolution of banking, we've seen that the provision of these services over time became more and more bureaucratic. And the design of the delivery of these services also added a number of layers, which was really driven by analog, outdated systems. With lean banking, what we are trying to do is, as we digitize the delivery of these services and the design of these services, to strip away those layers one by one. And it's about every aspect of that relationship that you create with a client, from the time of enrollment, where you're creating the account, the KYC or the Know Your Customer entry point, to actually building the delivery of services of those savings and the investment accounts, to actually then reaching forward and being able to predict services and products that this customer might need. And for that, you're using the data available on these customers. At heart, the philosophy is reducing the costs for the customer. And these are not just hard financial costs we're talking about, but these are all the costs of searching, of learning. So if, for example, you tell a customer, you can open an account for us, but the customer then has to go and do research on the internet or talk to people left, right, and center to find out how it's going to be done, that's waste. That's the kind of stuff that we want to take away. We want to enable people to be able to join those, avail those services, with minimal customer costs. So that's really at the heart of what we try to do with lean banking.
Right. So when it comes to making, I pick up from your words, reducing costs for the customer. I'd like to, if you don't mind, and both of you may wish to add to this, maybe take a few examples from our own experience and show where a regular banking operation or a more conventional banking operation has had savings that they can then pass on to the customer through the way that you manage lean banking.
So if you look at that in which it has been passed on, I would actually call it value for customer. And what happens is that whenever you are making the process simpler, the time taken for the customer and the time taken for the bank reduces for each activity. So whether you actually reduce the price or not, you have reduced the cost automatically. Because if someone has to, let's say if a poor man actually has to come and spend half a day or a few hours, that few hours is it has a cost associated with that. And if that person has to come from a far-flung place, especially in microfinance, then that could mean a day's work. And that's the lost income for that particular small income person, or actually the customer. So, and at the same time, it's when you have less transaction cost, automatically the prices go down. I mean, the traditional check and an internet banking, just a very basic thing. A check used to have a cost. An internet banking is instant. It's instant, and it's mostly for free or very minimal cost. So that is one way of actually how by changing the system at a very broad level, in which a normal person would actually, who's a non-banker, would be able to understand, has passed on to the end consumer. Like Standard Chartered, if I'm not wrong, that 75% of the transactions in Pakistan happen through the online portal.
Right.
So if I
75%.
Yes.
That's quite a number. Yes, please.
I don't go to my branch anymore.
Yeah, amazing. 75%. Tohru, you were going to say, please go ahead.
Yes. So I'd like to give an example from the digital banking that I launched in Pakistan a few years ago. And I was part of a microfinance bank, and they were launching a set of digital services. Now, a microfinance bank, as you know, plays for a certain segment of society that they've identified. And, there are typically a few 100,000 customers that they're aiming to service through a network of brick and mortar branches. The digital bank part that they were launching was meant to then expand, put this on steroids, and reach out to the entire country. And so you could have a customer signing on for an account anywhere in the country, anywhere in Pakistan. Now that required redesigning of the back-end processes, and particularly enrollment. So when we looked at the conventional approach, the bank, because it's also very heavily regulated, required customers to walk into a branch, sit with a relationship manager, go through a set of documents that they had to sign, they had to read, a lot of, the know your customer phase was quite onerous. And of course, this added a lot of operational overheads. You needed to have a brick and mortar branch where somebody could go and sit down. You needed to have staff present over there who would then interact. And this entire process could take days, because then the back-end verifications were being done. Of course, this was not going to work in the digital banking side, because when you're scaling up for potentially millions of customers, you need to have speed and quick turnaround times. So the way we redesigned the KYC phase, and with a lot of support from our regulator, the State Bank of Pakistan, they were very supportive of this. We were able to redesign the process so that as you know, Faisal, in Pakistan, we have an institution called NADRA, which houses all the data on citizens. It's a digital database. So we managed to redesign the onboarding process so that we could use that digital database that we had on citizens, allow customers to remotely just download an application onto their smartphone, link it at the back end with the NADRA database, so that people just had to enter their, national ID card information, and then there were some secret questions we had built in, and it allowed people to create an account, activate it, sitting remotely in any part of the country in a space of 5 minutes. So here you had, a process for the conventional onboarding, which was taking days. It involved a lot of customer visits, and it involved having a brick and mortar branch which was running. And on the other side, you just had a KYC phase which lasted for 5 minutes. The customer could be sitting in his drawing room and never step out of the house and just create an account. So that was one way where the principles of lean banking were coming in. We were stripping away these additional layers. And of course, the advantage of this was because a lot of the operational cost was taken out of the equation, we were able to offer these accounts virtually free to our customers. So the customers didn't have to pay a penny to download that application to create their account with that bank. And after that, once the relationship started, because the operational costs of maintaining that account were so low, because it was entirely digital, we were able to do away with all kinds of, cash in, cash out charges. So all of this was being passed on to the customer.
Right. So is there a number as to sort of the pass on of the volume, the percentage, or any ratio that you wish to share with us, say from moving to regular KYC to digital KYC? That's the first question. And the second one is, most of us, when we want to experience customer services, we want to see, touch, feel here, it's a human experience. So
Yes.
first question is, what was the ratio of savings that was passed on? And second was, what was the way that we were able to substitute the human element in the KYC process when we went completely digital, particularly in a technology that is not easy for a lot of people, particularly of a certain age or an educational status?
Both excellent questions. In the case of the conventional approach, what we are talking about are multiple visits to the bank for the customer. That typically meant a few thousand rupees. So if I were to convert that into dollar terms, we're talking about $40 to $50 that were involved just in the customer, going to the bank. And this is not counting the time they had to take out of their work. So there was an additional cost incurred over there. Versus absolutely no visit required, sitting at home, activating the account within 5 minutes. So at least the savings of a few tens of dollars for the customer. The other aspect we were able to pass on to the customer, which was a longer term aspect, was because the operational costs of this account, the digital account, was so low, we were able to, as a bank, absorb these costs. So a typical transaction, for example, let's take an interbank fund transfer that customers would do from one bank to another. A lot of the banks in Pakistan, and I'm sure in other countries as well, treat this as a revenue stream. So what they do is, if you're making a deposit to a different bank, if you're paying a fee or whatever, there would be a commission or a fee, service fee would be charged on that transaction. Because the costs of operational costs were so low for the digital account, we were able to absorb this cost and make it absolutely free for the customer. And that was important because our philosophy was, and still remains, the philosophy is that, look, for a digital service to take off, which is based on financials, you need to take frictions out of the ecosystem. Something you said in the beginning, I just want to add to that. It's about when you're alleviating poverty or you're moving people up the socioeconomic ladder, there are infrastructure challenges which will block the customer from moving up. And they're not just about money. It's about creating that enabling ecosystem where, you're bringing in a lot of these services which will, take care of it. It becomes kind of a safety net. So credit is one part of it. It's like the oil that runs through the machine. But then you need to plug in those gaps, where leakages are happening in that machine, and that's insurance coming in. And then you need to have the engine doing something, which is the e-commerce part of it. So all of this has to work together for the person to actually move up the ladder of the pyramid. Now, to come to your second question, which is a really, really good one, and to be honest, I don't think I have an answer for this one. It's about the relationship aspect. So if there's one thing that I've learned from microinsurance in Africa, from launching digital banking, from working on this mobile money side, it's that, yes, there's an allure. I would almost call it a myth that once you digitize, you suddenly solve all the problems for the customer. No, actually, you don't, because there is a journey for this particular customer that you have to take them on. And that comes down to product design, service design, removing all that fat from the services we were talking about. Because here's a question. A customer who's maybe never used a smartphone in his life, you've convinced him to get a smartphone, to download your application and become digitally connected to you. Great. That customer has never used a digital menu. He's not aware of it. Something as simple as layering menus, knowing that if you click on this button, it will take you another set of choices, where you will click another button, it will take you to another set of choices, and that's where you actually avail the service you're looking for. That's an alien concept for a lot of people who've not, and we will take it for granted because that's something that we're used to. So the customer journey becomes so important, and at some point, the relationship simply cannot be handed over to a completely digital world. There has to be hand-holding. You have to have, yes, you need to digitize where services are understood, standardized, but where people need to talk, where people need to confer, they need guidance. We need those relationships, those human relationships, to be available. So whether you do that through call centers or you have a team of field agents, that's something that I think the model is still out. We need to figure out. But definitely what digitization of services does is that it removes a huge layer of the operational cost so that you can maintain a smaller team, which is then dedicated to these higher value relationship exchanges.
Great. So, but I'm happy that you were kind of wide or kind of wide ranging in your answer, because I think that it's also very context specific. And so, since we are talking about your experience in Africa, or Toosy's experience in, say, his European experience, your experience with Telenor, so I'd like to ask us the same question to Mr. Toosy and ask, how does the human-centered interface figure into a Lean Six Sigma design, especially when it's a digital, completely removed experience, which may be very efficient, cost-effective, time-efficient, but lacking the touchy-feeliness of a human interaction?
That's actually where the design thinking, the lean user experience comes in. And that's exactly why in the offerings which we have in our Belts training, we have lean user experience, we have design thinking, and those part of the basic curriculum, because it's essential. And where it comes in, because you've actually asked a very particular niche thing. So that maybe the best example, or let's say not the best, at least one of the best, is ING Bank. That's in Europe. Now, what they did was they collaborated with a company like Spotify. Now, Spotify has nothing to do with financial services, but Spotify has created a trend and a way users have interact with platforms. So once you actually can relate that way of interface with what you're already used to, it's all about finding out which segment has what type of habits, and understanding that, and then translating it into your product. And similarly, that was Europe. And I can tell you something which happened in Pakistan, which we did. Tughal and I were both part of that initiative, was that we sent a team that go on Grand Trunk Road and find out what the common man thinks like. Because I and Tughal, we are from a particular background, we think in a particular way. But when we're talking about the whole country, it's diverse. So one of our learning was, out of many, was people share, even the people who cannot read and write, use WhatsApp and share voice notes, because voice notes is very easy. And because when we created a Urdu version of the same, I would say, platform, an Urdu interface, we added certain features which were voice notes so that people could understand how to use it. Because of that, the people who were not educated also started using it, because that they could relate to it. They could relate to it because it was an experience which they had with WhatsApp. So sometimes you need to go outside of your traditional thing, and you need to go outside of your traditional industry and start learning from the associated industries. Like when Lean Six Sigma started in the service industry, and when it started from the bank, in banks and insurance companies and financial services, obviously they had to hire people who already understood Lean Six Sigma, and they were only in the manufacturing sector. So they had to actually take some of that ideas from the manufacturing and translate it. Once you've translated it, that's a different thing. But similarly, when you go to an ecosystem in which you understand, let's say we're talking about Nigeria. Now, what are the local dynamics of Nigeria? You need to understand that, how people behave. Like me sitting in Pakistan or you sitting in Thailand, I mean, we could just imagine, but the research is the real thing is going to be when you actually do a proper research and proper find out the way of thinking. You go deeper, and sometimes you don't ask the obvious questions. Your questions need to be, how do you behave? How do you eat? How do you interact with people? Because it's all about what we're talking about all about the interaction, the lean part of the interaction of the digital platform with the user. And similarly, we're going to be talking about I2C in a different webinar, but I can say that what they made a very beautiful product, which is configurable. Each and every feature is configurable in that platform, and you could have the most conservative program, and you can have the most lenient program, and it would be on the same platform, because each and everything is configurable. Each of them is user friendly. They use heavily used data analytics, and they keep on evolving. And obviously speed is necessary. If you're gonna have a transaction, if your customer demands you that I want to transfer 1 million money to 1 million people within a minute. So I'll give you an Excel file, I'll give you a file, and within a minute, 1 million different people should get paid. That means you need to have the efficiency. You have to have lean built in all of your activities to enable that transaction to be fast enough. You need to have the systems and the network and everything surrounding the whole ecosystem in which you're operating fast enough to enable 1 million transactions in 1 minute.
Yeah, that's an example that I think is fascinating, and I think it creates, at least in my mind, a desire to go in and dig a bit more deep into this whole thing. So I'm going to ask you, is there some kind of a masterclass or a course or something that for those of us who want to really get deeper into this conversation that you might make available, or is it coming up soon?
We'll be coming up with masterclasses. So
where who should we contact if and when?
It's AIT. It's the
it's going to be on the AIT website.
Yeah. It's going to be on the AIT website. And the other thing is, part of the BELTS training, what we actually came up with, and the initial discussions which Dr. Faiz and I had, was that the knowledge area has evolved a lot since 1985. And if we keep only the traditional material, that would not do justice. And because we're offering it through a university, and we're not offering it through someone who has a predefined criteria, we have taken the leverage. We have taken the leverage of adding such topics in the main curriculum, because I believe that without these things, it's not complete without these things.
So
because these things have now added. These things have evolved now.
Right.
So these are actually part of the regular courses too, and much more.
Excellent. So taking a page out of your earlier comment about listening to the customer and service design, which I thought was an excellent example, by the way. May I ask, Tuhril, if you think there is a demand among people to actually understand Six Sigma in the lean banking sector, and that whether they would be, for instance, if we went and had more webinars or launched master classes, you think that would be of benefit to people? And what precise benefit would it be if people went in and learned more about Lean Six Sigma and link it to their banking experience?
Great question again, and the answer is yes. I'm very, very convinced that there is a demand, and it's being driven from the fact that there is a transformation taking place in the banking sector. We've had conventional banks that have operated as they've been operating for decades, unchallenged. We've had microfinance banks also set up and specializing in their domain. But now what has happened over the last, I would say, decade or so, and more so in the last 5 years, is the advent of fintechs. And these fintechs have refused to respect the boundaries of the incumbents. So they go in and they're disrupting the conventional business models of all of these banks. And therefore, they were able to ignore them in the beginning, but just look at India, and you've got Paytm over there. We've got Easy Paisa and Jazz Cash in Pakistan, which 5 years ago they might have been seen as small players in the mobile banking industry, but now we're talking about already about millions of accounts for each of these. Similarly, we've got services in Bangladesh that have sprung up on the back of fintechs. What that is doing is it's starting to eat into the pie of the incumbents and the microfinance banks. And now they're having to respond. And the first thing that they're doing is actually looking internally to see what are the operational cost drivers. And how they can improve them. Lean Six Sigma brings in the ability to actually strip away those layers of costs that have been added because of inefficiencies and reimagine, how these processes should be. So there is a demand. The demand is driven through a market transformation, which is happening. And I think the first layer of application would be very much internal, where banks would look at their design of delivery of services, their operations, back-end operations. But then the very immediate next step would be the design or delivery of services for the customers. And from the customer's angle, how can we improve, the service delivery and increase the stickiness for the customer so that they don't get poached by all these fintechs which are springing up?
Right.
Yeah, Dr. Faiz, I would like to actually add in over here some very simple tools about value stream mapping, process flows, and challenging each and every activity. That's a very simple thing. That's a very small tool in the mini toolkit which which we use in Lean Six Sigma, can help hugely, because then you actually question each and every activity and the rationale behind an activity. Like, I can give you an example. If, let's say, Tugral approves something, I approve something, you approve something, you've all approved something. Now, does it make any logic for the three of us to get together and talk about it for 1 hour, or let's say 20 minutes, and then approve it collectively if we've all individually approved it? That's just a small example. And if such a thing is happening, let's say 200,000 times in a year, or maybe 1,000,000 times a year, just imagine the cost. Just imagine the cost of actually some people having meetings and discussing trivial issues, especially when it has already been established. Let's say it's already been established that you have to pay back the customer because the transaction was wrong. Now, what's the point of having a high-level meeting of how to actually pay him back? Just pay him back. You need to, when it's already been established. Why are we going to spend 10,000 rupees to give 75 rupees back? It just doesn't make sense, especially. And that's another thing why the beauty of Lean Six Sigma is that Lean Six Sigma says do not have any preconceived biases. Look at everything at its merit and prove whatever you're saying is right or wrong through a scientific method, so that sometimes you keep on actually listening. You keep on listening that you're not a banker, that's why you're thinking like that. But at the end of the day, if someone's going to actually give you a different perspective, he's not going to be a person who's actually done the same thing.
So what I understand there is
50
that
years or 30 years.
It doesn't matter whether it's banking or any other service industry. Lean Six Sigma is applicable at the principal level, at the level of the tools and methodologies to just any outfit out there. So technically, what we can say then is that even though banks are of course, they're a huge industry and it's a very profitable industry for some, are primary customers for such shaving, as Tugral said, inefficiencies away. This can apply to just any service industry also.
Yes, it's any service industry. Lean Six Sigma is industry agnostic.
Right. So when people come to your courses, basically, they get a wider toolkit of skills and tools and approaches that they can apply to most every process-driven system. Right.
Yes.
That's good to know, because I think a lot of our people, when we talk in these webinars, a lot of people ask questions. And one question that just popped up from Mr. Venkat Subramanian is that what stage does Lean's banking actually get applied, right? What's the entry point? What stage in the entire service tiering does Six Sigma enter? That's my understanding of the question.
Yeah, and the way...
The second part of the question is it somehow linked to the digital enabling or the digital competencies or the digital platforms available to a business? So is Six Sigma and digital platform somehow related? And at what stage, what entry point does it operate?
Yeah, I would like to actually...
We can take a question from answer from both of you, if you don't mind. Yeah. So maybe Tugral can go first, and then back to Ali. Mm-hmm.
Sure. Thanks. A great question. And whenever you look at a transformation, so I think I'll start by answering the second one and then coming to the first. Yes, there is a very strong link between the digitization of service and lean banking coming in. Now, it is not necessary. You can still drive a lot of benefit, even if you're not launching digital banking and you're still looking just to become more competitive, to actually apply Lean Six Sigma and look at how you can improve services. But if you're doing digitization, then it is almost a necessary step. And the reason for that, and now I'll come to the first question that was asked, is because you need to re-examine your existing processes from inside out before you actually launch a digital bank. So in my opinion, and this is based on a few transformations I've been a part of, when a bank or any institution begins a transformation, the first thing to do is look at its core processes. Don't do transformation at the periphery and then work inwards. Start inwards and work outwards, because what that allows you to do is look at the core processes and then start designing the layers that go around it. And because they all need rethinking in a digital world, they all need rethinking. You need to have actually an efficient design that emerges, which may be completely different from what you started out with. So a bank which is about to transform transform, if it starts by working on what its core function is and building services around that and transforming around that, it might actually end up becoming a bank which is completely different. And I'll give you an example. The same digital bank we were a part of, brick and mortar, the entire DNA of the bank, its validation was driven by the number of branches it had. And once we started working on the digital transformation, the very first question we asked was, do we need these branches? In a digital world, can we reduce the size of these branches to maybe just one outpost? One person sitting somewhere in a space that takes less rent, requires less utilities, expenditures, etc., etc. Those, you'll be surprised how quickly the core turns on itself, with these questions which are being asked. And like you said, Faisal, it is not limited only to banking. I mean, because I also have experience in insurance transformation. This is exactly the kind of approach you need to take over there as well, which is by asking, what is the core? What are we trying to do as a business? What's the service we are in? What is the value proposition? And then you start looking at how do you redesign the processes that deliver that value proposition. So a great question. Transformation, think about transformation from the inside out, and think about actually digitization, starting at the core and then working outwards.
Great. Thank you
Yes.
for that. Anything to add to that?
Yes, there's a few things. First of all, whenever you're going to start, whatever Tughlaq said makes sense. And yes, it's really good. So I actually agree with all of it. At the same time, there are some other things too. Whenever you start a Lean Six Sigma initiative, that Lean Six Sigma initiative needs to be institutionalized. And that Lean Six Sigma initiative will be institutionalized when that Lean Six Sigma initiative is solving the core problems. It's aligned with the overall organizational objectives.
Allow me to interrupt you there, Mr. Toosy. I'd like to see, because when you talk about institutionalization, you're almost without exception talking about top leadership championing a particular approach. I'd like to, and I know you were in mid-sentence, but it struck me that I think our listeners would like to get a really good example from a really top-end, say a bank, large multinational bank, or a visibly or a recognizable name where leadership was either instrumental or not in transforming a bank into a more efficient bank. Is there an example from that? Because I think what you're saying would actually be borne out by a story rather than what.
Yes. Let's put it like that. Bank of America is a really interesting example. They started in the late 90s, and the first Greenbelt project was championed and overlooked by the CEO. That was the level of commitment that the first was overseen, and then every person who used to report to him was given Greenbelt projects to deliver. So when the CEO is driving it, it's a totally different ballgame. And I would like to actually quote a recent research which I've read, is that someone did a research over 20 years. The data flowed over 20 years, and they studied initiatives which were successful and which were not successful. And every successful initiative has a slightly different reasons, slightly different dynamics. But there were three things which were common in all these successful things. All these successful initiatives, there were three common things which they actually researched. And that's also part of my training, because it's one of what I deliver. It's, first of all, the top person would go out and attend different workshops. From there, the top person would find a sensei. A sensei is what you call a leader, or let's say sensei is not. It's more of a teacher or mentor for the CEO. And then that CEO would call the person in, listen to whatever the sensei is saying, whether it made sense to the person or not. They would listen, because everything which the sensei is going to say may not make sense to you. But first, choose wisely who you want to follow. Once you've actually chosen that, listen to the person. And then after you're listening, the third thing, which the key thing was, they created a learning environment for themselves, and they created a learning environment for the rest of the people. So that learning environment, or the learning, was not limited to the top leadership. The learning environment was at the next step, and it trickled down down all to the grassroots level. So these three things were the reason. These things were common over 20 years of study of the companies which actually had successful Lean Six Sigma implementation. This was a very interesting thing.
So you had the top leadership basically
Yes.
leading this whole transformation, and then the whole idea of the sensei, and then the internal, what you might say, consultations and dialogue.
Yes.
And self-correcting some of the process level waste, etc. These are fascinating concepts, as we all understand, and I think there's a lot in this conversation for a follow-up. I'd like to also basically go back to this whole idea. We are basically pushing this conversation from when it emerged, how it's panned out in different regions, how function and dysfunctional sort of banks are comparing their sort of customer impact, etc. Those are great points. But I would like a few more examples, if you like, as we close, because the two gentlemen here, both of you represent experience from literally the four corners of the globe. So you've got Telenor, you've got Blue Marble, Finca, you've got TAS, all these these are all geographically distributed as they are contextually distributed. So in the few minutes that we have, I'd like to maybe enrich this conversation with a couple of more strong examples of how your experience has differed or created, replicable lessons for you from various parts of the world. May I take Tughrul first and then go back to Mr. Ali?
Mm-hmm. So I think, if I look at the businesses I've been assessing in South America, so we're working with some partners in South America right now, and then my previous experience in Africa and in Asia, the common thread that I've always found working with organizations is that organizations often have great aspirations, but they don't know how to get to that point. So they understand that there's something they need to change about the way they're doing things, but it often takes an external viewpoint to explain it to them. In the partnerships that I've been building, one of the common themes that has come across, and what we worked on in transformation again and again around the globe, is really how this new world, the data world, requires organizations to transform themselves internally. And this is a common thread. It doesn't matter which part of the world I'm talking to, which industry I'm talking to, I find this to be a common thread. My experience has included not just coming in with solutions which then come externally and plug into these organizations, but also of requiring these organizations to then transform their internal processes. My advice to anybody who's listening right now is, one, do not get overwhelmed by the challenge itself of transformation. I think a lot of the lessons that Faisal, you've spoken about, Toosy spoken about, they're right on target. The most important is that change of this sort needs to be driven right from the top. A common thread for all failed transformations is lack of support from the CEO, from the chief executive himself or herself. Wherever that has fallen short, organizations have fallen astray. So do not be overwhelmed. If you have the desire to transform, expertise such as that is available with AIT and then with Toosy, these are the right platforms to reach out and then make that connection happen with the management layer and lay out a plan which is not overly ambitious, but begins by addressing the core problems first. So it's a common thread. I've seen it around the globe. I think when we talk about where the transformations start, they usually just start with the core of every one of these businesses. I don't know if that was
a supplementary thought into that. We've just received a question from Muaz Altaf, who's asking, could you also give some examples of wastes in banking institutions and financial services for which Lean Six Sigma is particularly appropriate? So
Sure.
This could also be interpreted through your global perspective.
Okay. There are a lot of examples, actually. I mean, I spoke about KYC, know your customer, during the enrollment phase earlier, but let's add another example to that. Let's talk about, for example, just making a deposit in an account. It's a very standard service. It's a bank. It's a saving account. You just want to go and deposit cash in it. A conventional bank will require, in a lot of our countries, will actually require some amount of documentation to go with that submission. So you would require to either go present a check or cash at a certain point of contact, a point of sale. It can be done through IBFT, but here's a lean process that I can tell you about that I know has been deployed in the last couple of years. Like ATM machines, there are now machines which have been developed and deployed which actually do not involve any kind of visit to a bank or a branch. They could be in a shopping mall, they could be anywhere else, where you go in, identify yourself as a unique customer using your ID and your password. You log into that machine, which is a kind of a standalone machine, and you make a deposit right there. Your deposit's accepted into your account after doing a biometric verification, which is done using a thumbprint. That's it. That's the whole process right there. And this no longer requires, extensive, documentation on part of the bank. It doesn't require reconciliation to be happening at the day end when the closings are done and the countings are being done. It doesn't require the customer to actually make a trip across the city to go to a particular branch or even find an outlet where he can make that deposit. All you need really is to walk to a shopping mall or any location nearby where you know that machine is located, and that's it. So that's another example of a transformation which is taking place today.
Excellent.
Okay.
Thank you.
Yeah.
Over to Mr. Toosy, and there's another question here, which, if we have time, I'd invite you to address as well.
Okay.
Where do you see the role of blockchains in your Lean Six Sigma? So please add that to your comment. Yes, please, Mr. Toosy.
Okay. First, change management is a core, and because of change management, a lot of transformation fail because, just like Toggle said, people are not ready. It's not what you change, it's how to change. That's where change management comes in. And that's why I personally believe that change management is a key part of the BELT's curriculum. And another thing is, coming back to the example, a very common example, it is the number of emails you get, the numbers of unnecessary emails you get. If you are spending half an hour on reading unnecessary emails, if you take out that, you have taken out, 12% of your work. So the desire to make yourself CC in every email is actually a problem. And I know a person at a very high position within the banking industry who told me that he left his job because he had to read unnecessary emails for 5 hours in a day. That's one. Another thing is that in risk management, sometimes there's some small thing which is missing. And because of that, you send the whole thing back. And it would be much faster if you just pick up a communication device and find out that information there and then sending it back and it coming back to you in a day or two. So instant. When we're talking about lean, we're talking about taking out the waste, taking about all the transportation costs, talking about the information costs and making it at minimum. And a big problem with the banks is that sometimes your risk department or your audit department might think that their reason to our existence is to actually create more checks and balances. But more checks and balances does not necessarily make it better, because maybe your checks and balances are not even addressing that problem you are actually having it for. So, and there's always going to be a balance between ease and these checks and balances. So the banks have to go out of that thing and understand the regulation, the spirit of the regulation, instead of understanding the way of working they had since 50 years or 100 years. And they need to understand the spirit of what regulation was there, why was it there, what risk was it actually covering, and is there a simpler way to do the same thing? So that's where the wastage is reduced, and that's why a lot of bottlenecks are actually come out.
Lovely. And what about the blockchain and the relationship between the blockchains that are now becoming more and more useful, more pervasive, more ubiquitous in transaction monitoring?
Blockchain
and their relation with the Lean Six Sigma. We have only 1 minute to go, but I think people have patience for this one.
Okay. Blockchain has the potential to disrupt. Blockchain may be a solution, and most probably it will be a solution. And
in relationship to your Lean Six
Sigma, if the solution is go for blockchain, then it is go for blockchain. I won't say that automatically go there, because in Lean Six Sigma, you're finding out the rationale and the understanding whether you're supposed supposed to do something or not. You can actually spend millions and millions of dollars on digitalization.
Right.
But first, you need to make sure that there's sense of spending that millions of dollars.
It's more at the, as you say, at the level.
Why are you doing it? Why are you doing it? If that's the reason.
Comment from Mr. Tughril here, and wind up.
So, given the paucity of time, I'll keep it short. I think the biggest impact of blockchain, and there will be a huge impact, is going to be on the side of reconciliation and the back-end operations. Because banks tend to spend a lot of money, a lot of operational overheads. They incur a lot of overheads looking at the reconciliation aspect, the record-keeping aspect. That's something that blockchain technology can very efficiently solve for them. I think the jury is still out on how this is going to progress. These are early days. The deployments have started taking place. But conceptually, I think it is going to be the core operations that are going to get massively simplified, and the layers of counter checks will reduce.
Yes, and if I'm not wrong, crypto to Visa transactions on your point of sale has been there since I think 2 years now. Yeah, it's enabled even Visa. You just need to have a multi-currency wallet. And yes, the distribution system is really beautiful in blockchain. And yes, it can be a solution of many, but it's all whether there's a rationale behind it or not.
Right.
Automatically, you should not digitalize automatically. You should know why you're doing it.
I think it's clearly understood, and the questioner would have understood that Six Sigma is more at the thinking level, whereas a blockchain is a particular tool to solve a particular issue. So yes, with that, it's a 3:01, which is like 1 minute overtime. Good conversations always seem to go so quickly, and I've already got a message here saying they wish this was a longer webinar. So if that's an indicator of success, I think I'd like to thank both of you for your comments. Although I do understand that we were not able to have an expensive conversation. I hope we've whetted the appetite for some of our participants to return to us for more for the master classes and for the more substantial conversations and skill building that we will do at AIT. So once again, thank you both, Mr. and Mr. Toosy, for joining us today, and to all the participants who've signed in. And we hope to come back again with another webinar on another topic of your interest. Thank you very much, and until next time.
Thank you.